pretty much bearish outlook that we're seeing for the currency and inflation going forward from Citibank. What are your views on the currency right now, where you see it going in 2012, and the type of risk that we must attach to investing in Kenyan equities?
Well, I think we've seen the central bank, do what they can, and at least we've seen the shilling strengthen, considerably in the last 1 or 2 months. But again, just like at the beginning of last year, we started on a very positive note, and then all these external factors came and messed the whole thing up. I think the Eurozone is going to be a determining factor. I was reading this morning about what's happening in Nigeria, and I'm sure that that will definitely cause more uncertainty on the oil markets, which is not very good also for our inflation levels here if we do have a spike in fuel prices. And so basically we are really looking out there and hoping that the fact that we have had good rains and we are seeing like those factors that control, especially the food factor in the consumer price index going down, then we start looking at what could happen externally, and those shocks are what is really causing the uncertainty.
So some positives and negatives really there for inflation going forward, but oil, as you mentioned, is a big problem. That's why we've had the likes of Kenyan Airways looking to sign an agreement with 8 other airlines in Africa to jointly source fuel. They'll be able to negotiate it as a block, and those bulk purchases will help bring down their fuel bill. What are your thoughts on Kenyan Airways and the type of risks that we must attach to investing in an airline which is so perhaps heavily geared towards what's taking place in the oil market and fuel prices?
Well, Kenyan Airways has usually done quite well, especially during periods when the oil prices have spiked, because they have a very good hedging strategy, and I think it continues to work for them, especially now that they changed it after they made a major loss when oil prices dipped and they were caught wrong-footed. So I think that it still works for them. I think they're looking to take advantage of economies of scale. We've seen the same problem actually cause many of the multinationals in the fuel distribution sector actually exit African markets, because we don't have the sort of bulk, we don't have the sort of capacity which they feel is going to give them the correct margins. So I feel that for this, what the airlines are looking for is more of economies of scale, which will allow them to be able to negotiate better prices for their oil, and also to have less risk tied to the price of oil.
Yeah, it will certainly help that bill, which constitutes around 40 to 50% of their overall operating costs. Just to confirm also that existing hedging contracts won't be affected by this new agreement. Another cost pressure for the airlines this year is that carbon tax imposed in the EU. Airlines flying in and out of Europe will be affected by that. How is this likely to impact KQ, and what type of reliance does it have on the European Union?
Well, I think it's going to be across the board. KQ has a partnership with KLM, and I'm sure that whatever effect it will have on KQ will also be seen probably on their sister company. And I think that we'll just have to watch that. We're going to have a carbon market, being opened in the country very soon, and I hope that maybe they can find, credits, from people like probably Mumias, who will probably be big actors on that market, and sort of, bring down the sort of amount they'll need. But I don't know how much it's going to affect them, but I do believe that that's going to be across the board, really.
A lot of interest coming through from foreigners for Equity Bank right now. They've received a 2 billion shilling loan from KfW, which is a German development bank, to increase their loan book to the SME sector. And now that bank is looking to perhaps buy a stake in Equity Bank. What are your views on these two pieces of news flow, specifically also a tie-up with a European financial institution in light of all that's taking place in Europe right now?
Well, Helios Capital already holds a big chunk of equities of equities stock, and I believe that that in itself was a very strong showing towards what equity does. Equity deals mainly with the small, medium enterprise and the low end of the market, and that is where most development partners believe that that is what the part of the economy that is going to drive growth. And so I think that that is what most development partners are betting on. Equity is the strongest in this area. They understand the area. They have been growing and showing the ability. And I believe that this investment is actually a win for the lower end of the borrowing market and the SMEs, because they do need cheaper credit if they are going to grow, especially in this time of very high interest rate regimes.
Seeing as it's Bob Collymore, CEO of Safaricom's birthday today, let's quickly touch on that stock. What are your views on full year results, which are still expected from Safaricom? They had a weak first half, and of course the second half is when those tariff prices were implemented. Your views on Safaricom going forward?
Well, we've recently gotten news that there has been a rebound in their voice, and I think that that is usually the defining factor. So I believe that Safaricom is doing things right. I believe that the other factor is that Safaricom has a very strong presence in all the extras, which is the M-Pesa and especially. And so I still expect them to perform quite well. I do believe that it will take quite a while before they are really threatened by the other players, because Safaricom already has a very strong foothold on our market.
Yeah, and brand loyalty has been highlighted as one of their, of course, key assets. Thank you very much for your time this morning, Samuel Gichohi, research analyst from NIC Securities.